Hello, thank you to Master Investor for inviting us to present at the Master Investor Show this December 2020. Cometh the hour, cometh the man. We want to talk a little bit about the listed markets and UK SMEs and where we think that phrase comes into play. So just a little bit about who we are, what we do. 2020 for SMEs, the year of opportunities and challenges, a current view of the markets, a little look at IPOs as there's been a number of those this year, and a little bit on the outlook for next year. So Hybridan is a corporate broker operating on the UK listed markets. We are corporate finance heavy corporate broking firm focusing on research and putting companies in front of investors, and then at the right time raising money. We also, in fact, do quite a bit of work in the unlisted private company space, particularly fond of acting for businesses there where EIS eligibility is received. And separately, myself, I'm also a director on the Quoted Companies Alliance, and latterly, since 12 months, have stepped up there to become deputy chair. And with Master Investor, in fact, worked together on the Small Cap Awards, which this year was all done virtually. So coming to the title of the presentation, cometh the hour, cometh the man, a well-known expression that's been used throughout literature and by politicians, in the Bible, by Shakespeare over the years. And what do we essentially mean by this? That opportunities are come out of or born out of crises or difficult situations, and that it's in a difficult situation that one's mettle is really tested, both as an individual and as a company, looking to what the former CEO, Andy Grove of Intel, said: bad companies are destroyed by crises, good companies survive them, great companies are improved by them. Certainly in the UK listed territory, we've seen plenty of COVID presented opportunities, be that the initial RNSs that companies started to release with the beginning of lockdown 1 in March, April and May time, the great performance of many listed SMEs, and hitting back at private equity, really, life sciences making a comeback, and M&A starting to increase, possibly looking there at getting in ahead of CGT changes next year. There's been a general fundraising bonanza, some new business models, some great performances across the markets. So looking at 2020, year of opportunities, a year of challenges, and what that's meant. So life sciences, I just mentioned, there's been many IPOs, 59 biotech IPOs in North America alone this year. You'd be up 42% if you backed all of them. So it's been a sector that's seen a resurgence. It's been long awaited, many will say. AIM placings have abounded with institutional investors not averse to a bargain. So Hotel Chocolat Group was one of the first out the gates. If you cast your minds back to March, April time at the beginning of lockdown 1. Many have followed on since then, from Everyman Media Group, Fire Angel Safety Technology, City Pub Group in the first few weeks of lockdown, with some not unsubstantial discounts to their pre-crisis levels. 30 to 75% discounted placings were seen at the outset. And then more recently, winning sectors have kind of driven the placing. So Victoria PLC, a floor covering home improvement business, recently raised 175 million from a US investor. You can imagine yourselves the winning sectors include technology, IT. We've talked about life sciences, online retail, sadly insolvency practitioners, DIY home improvement companies, estate agents, food production companies. Schools and colleges have remained open for this second lockdown, along with the companies supplying them, and those in construction and manufacturing are also open. So construction material suppliers such as Breeden Group and Sigma Rock have been doing well. Activity levels have been improving since May, following a return to house building and other construction activities. Estate agents are open this lockdown too, and are already benefiting from the stamp duty holiday on house sales until the end of the tax year again. Sector's been booming, letting activities have held up well, so firms such as Belvoir and Property Franchise Group will be doing even better there with their estate agency operations continuing to trade. Online retail obviously has done very well. Naked Wines, purely an online business now that it's sold the Majestic Wine retail outlet side of their model, a subscription-only model now, which is working very well. Want to mention Gear for Music, musical instruments retailer, another online focused business, did well during lockdown 1, could be doing even better now during lockdown 2, with schools still open, given that it supplies instruments to schools. DIY home improvement, again, people have been spending money there rather than on travel and entertainment, for instance. Gold miners that think perhaps the world is going to be tough next year for those gold bugs. Gold has always been a good safe haven. Lock and store self-storage sites have been prospering as additional space has been needed whilst people continue to do their home improvements and have a bit of a clear up. Stores have stayed open and the companies adopted ways at Lock and Store of working, including additional opening hours to ensure visits are spread out. It's trading better than expected since May, and figures for the year to June slightly better than pre-COVID-19 expectations, and forecasts were upgraded. So losers, I've already alluded to there in terms of sectors: leisure, travel, bricks and mortar, retail, airlines, not that there's many at the SME level, but pubs, restaurants and such sectors. You know, as a reminder, lockdown 1 was for 10 weeks and non-essential retail was shut, and 15 weeks of closed down for leisure activities. Value investing is still rather out of favour. The market's favouring growth, momentum strategies, and lowly geared balance sheets have been preference and in favour. Companies that are cash generative as well. It's about the quality of revenues, recurring revenues. So company such as smart metering systems, cash generative, long-term recurring revenues. There was a lockdown for those guys during lockdown number 1. But installation revenues have continued at a fast pace since then, and it continues to trade and be open during this lockdown. I think the message is in the opportunities and challenges: don't wait for the new normal. It doesn't exist. Management shouldn't be sat back waiting for the uncertainty to end, but should be approaching investors with their credible stories for growth capital, updating investors in a non-deal capacity that they're still investing for growth as businesses. Those companies that engage with their investors and with the institutional and retail investor world will possibly be the ones most rewarded when this COVID crisis finally ends. Current view of the markets. I think I've given some kind of indication there that the UK small cap SME world has really remained buoyant. AIM market has continued to outpace the main market this year. So AIM market over the past six months is up circa 21%, compared to an increase of just 5% for the larger UK companies. And this is included post the vaccine bounce that we've seen over the past few weeks. Institutional retail investors have continued to be attracted by a plethora of high growth companies, all sectors raising capital on AIM. UK PLCs have raised about 30 billion in new equity since the start of the year, and the public markets have generally continued to deliver their primary function of supplying capital efficiently. 4.1 billion AIM secondary placings raised in 2020 as at the end of October. Second and third quarters of 2020, we've seen some 275 companies raise capital in the face of COVID. Largest number of fundraisings in a 6-month period since at least 2016. Kind of timely that it's 25 years ago that AIM was born, reminding issuers, investors alike of its ability to allow companies to access capital quickly and even at the most challenging times. IPO activity, still reduced from earlier years, has certainly shown signs of coming back to life, particularly in the second half. September saw the largest main market IPO for 3 years. The largest tech IPO, Hut Group, raised nearly 1.9 billion, with 7 companies already listed on AIM since July, compared with 3 in the first half. We've seen well-known entrepreneurs and backers come back into view. So Hugh Osmond of various eateries, which raised 25 million on AIM. Just to mention David Beckham's backed Guild Esports, more of which we'll talk about later, which raised 20 million on the standard list. Retail investors, very important, vital role in the small cap markets. and really have come into their own this year. We advise management to ignore this vital source of liquidity at their peril, with some 80% of AIM companies having an average trade size of less than £10,000. It is still, it is increasingly a retail market. At the end of October, AIM recorded the highest number of bargains, 13 million so far. So turning to each of these markets then, and the way that Hybridan views the UK listed landscape. So a number of IPOs in 2020 there. I'm very happy to share my presentation afterwards, but you can see the ones in blue are the ones that I'm going to talk about, but there have been a number of new company placings, IPOs, reverse takeovers, some good activity on AIM this year. The main market equally has been very busy. I mentioned Guild Esports PLC. I want to talk about that one, and Pensana shortly. And Aquis has had a fantastic comeback this year with its new owners, its new investors. We saw an announcement yesterday regarding market makers getting involved in that market increasingly. And there have been some fantastic IPOs, and I want to talk about one of our own, if I may, Rural Broadband Solutions PLC, which came to market by way of reverse, but some great new business and companies going on Aquis. I mentioned that I want to talk about a few of these IPOs. The IPO market has really come back this year. It's been a little bit of a wasteland on the primary market, IPO market, across all of the London markets over the last few years. So it's fantastic to see some good businesses coming back. Looking at Maine, there was a long list there, but I'd like to pick out two in particular. Guild Esports, first esports business to list in London. Esports are electronic sports, usually in the form of competitions using video or electronic games for multiple professional players, and watched at a physical venue through digital media. Think Fortnite, Rocket League, FIFA, and Valorant. I think we expect to see several more esports disciplines over the coming year. Guild launched on the 25th of June. It signed a leading FIFA esports player, and it has David Beckham to be the face of the company's brand. It's a large and rapidly growing market, you can imagine, particularly during lockdown. The market's expected to grow by some 646 million viewers by 2023 from 443 million viewers the last year. The listing was done at 9p. It promptly fell, sadly, to 8p on October the 2nd, first day of listing. It now trades around 7p, so a fall of some 20%. Perhaps some skepticism there about it being a David Beckham story. And I think it's fair to say our view is the valuation was certainly toppy. Pensana Rare Earths PLC, let's move to that one. On November the 13th, Pensana listed. It's more than quintupled since its introduction to the main market on July the 6th. No new funds were raised. The company is developing a rare earth asset in Angola, producing minerals that are in high demand for green technologies such as electric vehicles, offshore wind turbines. It's caught the wave of investor interest in both the post-fossil fuel economy. It's had a big post-COVID stimulus program focused on the renewable sector. And there's been great demand for critical metals that Pensana is set to produce. I think the explosion of ESG-focused funds can perhaps help the attractiveness of this one that listed on July the 6th. So it was November the 13th where it had hit the kind of quintupled since introduction to the market. So that's done very well indeed. It's secured further projects since listing already. It counts the Angolan Sovereign Wealth Fund, which has 18% of the company amongst its share price. Amongst its shareholders, share price up more than 300% since listing as of today. So let's come to the little list there of AIM companies that I want to briefly touch on. Source Bio International PLC returned to the London markets, interestingly, to focus on COVID testing. It was listed on Main 4 years ago, was taken private. It had a number of poorly performing businesses, and it's now come back to focus on diagnostics, genomics, infectious disease testing. COVID-19 testing generated 2.16 million in revenues for the company in May and June alone. Interim revenues were some 10.7 million. So some great help with COVID testing. They would have been perhaps lower on an interim basis otherwise than in 2019. Raised 35 million, part of that went to pay down debt. Quite a toppy valuation at 130 million market cap. I would say a classic COVID IPO, pretty opportunistic. Not surprisingly, in our opinion, shares are now fairly flat. Phonics Mobile PLC, mobile payments, nothing new to AIM. The sector's had its surge back in 2014 with many falling by the wayside since. Phonics shows that it's perhaps complex to get the sector right. It was founded back in 2006. It provides mobile payments, messaging services and so on for clients across media, telcos, entertainment, commerce. They've got some pretty impressive clients, handle some quite complex transaction. The likes of ITV, BT, Global Radio, Cometh Relief, Children in Need are their clients. Company raised 45 million at IPO, giving a market cap at 90 pence of some 92 million. June 2020 numbers showed revenues of 40 million, PBIT of 70 million, not an aggressive valuation when looking at year-on-year growth, and it's performed well, up 16% since admission. Calnex, moving swiftly to the next one, first Scottish IPO on AIM in a couple of years. Calnex, another example of AIM's ability to quickly represent companies operating in emerging trends, this time in the realm of 5G. It designs and manufactures equipment and software that allows telecom companies to test critical infrastructure within their networks to ensure they meet industry standards. It serves all the giants in the industry, including Nokia, Ericsson, Huawei, and major US firms like Cisco. Very fast-moving sector. It's had plenty of roadblocks put in front of it, such as the US, UK banning of Huawei from pushing ahead. Investors may well question whether the 6 million of fresh equity will indeed be enough to make a splash. However, the company now growing nicely, generating cash, some 14 million of revenues, 3 million of PBIT. Market cap was 44 million on entry, and it's now up some 29% to 57 million. Cometh PLC, pretty topical during lockdown, UK's largest digital mental health provider to the NHS, particularly for young people, children, young people aged 10 to 25, offers digital mental health services, broad range of therapeutic tools and intervention services to the NHS and others, and to charities indeed. It intends to use the new funds to support its growth plans. It wants to invest in its platform and service offering and expand. Share price nicely 12% above the issue price. I think it's a great example about how AIM supports growth companies that are particularly pertinent in wider society at that point in time. Digital health is tipped to, in a post-COVID world, be an important area of focus. So company IPO'd with market cap of 74 million, raised 16 million. A further 10 million was raised from existing shares held by Root Capital. So vendor placing, they'd backed the business since 2015. The numbers generally look good. Elixir International PLC, not one to be deterred by a global pandemic. It was the first IPO on AIM since the UK when the UK went into lockdown one. It was quite a defining moment and sigh of relief for all that small cap markets were still open. It's a consultancy business in areas such as technological disruption, raised 20 million of new money. Again, another vendor placing 5 million for founder shares. Market cap was 98 million on entries, got some nice numbers. EBITDA of 7.4, revenues of 26. Recent trading updates show that it's weathered the COVID storm rather well. Summer and September beat market expectations. Share price up a nice 15% since listing. FRP Advisory Group is another one I want to quickly touch on. It's in the area of restructuring advisory services. Arrived again on AIM at the beginning of lockdown. Beginning of lockdown one in March 2020, raised 20 million in new money and 60 million for selling shareholders at 80 pence. Net proceeds from the 20 million of new money to strengthen its balance sheet, potentially fund some acquisition opportunities. The numbers have been doing well. It's made 3 complementary acquisitions in Newcastle, East Anglia and Kent, and it's made some demand-led new hires, 14% revenue growth on the year. Shares are currently 30% above the IPO price. Inspecs Group, first IPO on AIM in 2020, coming on just before the onset of COVID, an evergreen type business involved in the design, manufacture, distribution of eyewear frames, global retail markets for this business. It raised 24 million, market cap of 139 million, 139 million sterling. Its numbers are pretty strong. It had a big hit during lockdown 1, but has since showed great resilience, and it's acquired a global eyewear supplier in Germany. Since then, the share price has done well, up 40% since listing, just shy of a 200 million market cap now. The last company I want to just briefly mention, eEnergy Group PLC, came to market by way of a reverse. One of its core markets is schools. Its group subsidiary, eLight UK, is involved in the installation of LED lighting for academies and UK schools. The board's general strategy is to develop eEnergy as a broader energy services company, acquire the business in this space. Interestingly, it was awarded the Green Economy Mark by the London Stock Exchange for its work on sustainability. Let's move to Aquis, which I mentioned earlier has had an exciting resurgence this year. Have to just draw your attention to the little asterisks on the slide deck there, Rural Broadband Solutions. It's one of our clients. I think COVID-19 has highlighted digital connectivity as an essential utility for the modern world more than ever. Rural Broadband Solutions completed a reverse takeover on Aquis in October, bringing to market a rural broadband provider that has made affordable high-speed internet a reality in some of the more remote areas of Shropshire. It aims to go through subscriptions through a programme of upgrading its core network to deliver gigabit-capable services, and by offering its customer base free installation using the gigabit and regional gigabit voucher scheme that the government has in place, which could mean that a large amount of its expansionary capex requirements are indeed government funded. The management team is extremely experienced, very active on new deals, new territories. I think we can expect to see them to be a fairly acquisitive company. Came to market raising 2.5 million at 2.5 pence, and the share price is nearly double where the issue price was. So outlook for the markets for 2020, will the mood music change next year? Well, we think small caps will continue to do well, but as always, it's about stock picking. Our advice remains the same, to stay flexible when it comes to new issuance, or if the discount needed is too deep, to consider perhaps other forms of financing, convertibles maybe, to continue to bring your stories as companies to new investors. It's a worthwhile exercise to be always looking to be on the radar of as many new potential investors as possible. If cash is king, liquidity is king. Investors need liquidity more than ever during these times. So it's about being proactive with investors, not just when companies need money, and ensuring all possible pools of capital are approached. I mentioned retail, hugely important part of the market. Both institutional and retail investors need to be approached, and the audience service. So we've mentioned tax efficient structures such as EIS, VCT. Those investors are still raising money, are still investing, very important area of the market. Ourselves, we've done a number of placings, IPOs in multiple sectors this year. The funds are out there for companies with sensible growth strategies at sensible valuations. I think we expect 2020 to start rather strongly, for the IPO market to continue both in the US and in the UK. I think there'll be a strong tech bias. Trustpilot, which is headquartered in Copenhagen, one of the world's leading online business review platforms, plans an IPO in the first half of next year, and has allegedly lined up 2 Wall Street large banks in London to handle this, subject to market conditions. Other IPOs that have been mooted for next year, for 2021, cybersecurity company Dartrace, food delivery app Deliveroo, the re-commerce platform Music Magpie, all drawing up plans for IPOs in London. Plenty of well-known names, TikTok, Lamborghini, Compare the Market, Jaguar, Land Rover, plenty of well-known household names set for IPO potentially in 2021. Could 2021 mirror 2014 for big names in IPO territory? The big names that came to market in 2014, such as AA, which is somewhat struggling at the moment, looking to be rescued by private equity Saga, Pets at Home, Spire Healthcare, Zoopla, Poundland, and so on. Could 2021 be the year where we see those household names come to market with a high growth tech bias as well? And London seeing its fair share of that activity potentially. So thank you for listening. Details here on the last slide of myself and our firm, and wishing everybody season's greetings and all the best for 2021. Thank you very much for listening.